The US dollar index is falling while the volatility of major currencies has declined to a 3-month low. Meanwhile, the Canadian dollar weakened following the announcement of the Bank of Canada interest rate decision. Now traders are waiting for the results of the FOMC meeting. In fact, the outcome of this meeting is quite predictable, so market participants are more interested in the post-meeting press conference. Jerome Powell and his colleagues are expected to shed light on their further plans for the monetary policy. It will be no surprise if the bank officials decide to put rate cuts on hold. Such a decision may prompt investors to close their short deals and boost a rally in the US dollar. However, the further policy plans of the Federal Reserve are unclear yet. The recent statistics from the US have indicated that the economic growth slowed down. Ahead of the FOMC meeting, the GDP report for the third quarter was released. Experts predicted that the annual pace of growth would come at 1.7%, following a 2% increase in the second quarter. However, the actual reading failed to come in line with expectations. The American economy expanded by just 1.9%. Despite these signs of a slowdown, the United States remains the leader among other developed countries and outperforms them in terms of the GDP growth. Therefore, the demand for the American currency and the American assets remains high. However, the US dollar opened the American session in the negative territory. The trading range narrowed ahead of the Fed meeting. The US dollar index was trading at 97.67. As for the Canadian economy, it shows signs of sustainability compared to other countries. The Bank of Canada officials previously stated that despite the trade wars, the domestic labor market and economy were in good shape. The recent data has confirmed this. At today's meeting of the Bank of Canada, traders expected no rate cuts, and their expectations were confirmed. The monetary policy rate remained unchanged. However, it was a hard day for the loonie. The US dollar versus the Canadian dollar pair held steady at 1.3087 ahead of the meetings of two central banks, but then the quotes skyrocketed. There is little chance that the Canadian dollar will recover, as the US dollar is likely to remain strong in the longer term. Besides, the Bank of Canada downgraded its outlook for the economic growth for the nearest 2 years. A break of the level of 1.31 was the first signal for investors to resume buying the US dollar versus the Canadian dollar pair. The Canadian dollar will be able to recover only if the price breaks the key long-term support level at 1.29. It will mean reversal of the dollar versus the Canadian dollar bullish trend. And that is all for today. Thank you for watching and see you back tomorrow.